In this video, I'm explaining taxation of Saccos in Kenya. Saccos are savings and credit cooperative societies that deals entirely with savings and credit. That therefore means that mostly Saccos deal with the members, because it's the members who save and the members who borrow. Sometimes non-members borrow, but majority of the borrowers are members. In Saccos, there's a concept known as mutuality. And mutuality is a situation whereby an individual makes profit from himself. This originates from the members being the savers and also being the borrowers, meaning the members borrow their own income or their own savings. And when they borrow, the Sacco makes profit out of it by charging them interest. Because of this concept of mutuality, you find that most of the incomes of the Sacco are exempted, especially the income from the members are exempted from taxation. Income of Saccos include the following. Number one is interest income. On loans to members. Interest income on loan to members is subject to mutuality, and therefore it is exempted from taxation. It is entirely exempt from taxation. Then we have interest from non-members and from non-members. Interest earned from non-members may be interest on loan to non-members or interest that the Sacco earn when they save in banks, when they invest in debentures and other securities, which enable them to earn interest. Such interest earned from non-members is taxable up to an extent of 50%. It is 50% of the income is taxable. The remaining 50% is not taxable, and it is assumed to be enough to cover the expenditure of the Sacco. Saccos also earn other investment income. Other investment income. In case the investment income is a taxable investment income, then it will be taxable in case of Saccos. 100% is taxable. Number four is rental income. The Saccos may have rental income, especially where they invest in rental property. And rental income, if earned by the Sacco, is taxable. 100% is taxable. Now, these are some of the examples of the Saccos which are taxable, and we can say if they have any other taxable income, which is taxable under the Income Tax Act, then such income will also be taxable. 100% taxable. Saccos are not allowed to deduct any expenditure. So expenditure, especially what is known as admin expenses, administration expenses, or administrative expenses. Administrative expenses are disallowable. Administrative expenses are disallowable, but instead they are allowed to retain 50% of interest from non-members, 50% of interest from non-members. This amount is assumed to be enough to cover the expenses that the Sacco incur in generating such interest income. Therefore, they are not allowed to deduct any expenses. But there are some expenses which are related to separate sources of income. For example, if they have rental income and their rental expenses, the expenses related to the rental income are deducted from the rental income. Or if they have some expenses related to other investments, such expenses are deducted from the investments before such investments are added for tax purposes. Therefore, the amount of other investment brought to be added is the net amount and not the gross amount. To illustrate this, I would like to use the following example. This question is adopted from Public Finance and Taxation paper from CASNEV, December 2021. It reads as follows. The following information relates to Msanii Sacco Limited for the year ended 31st December 2021. We have incomes, and then we have expenditure and additional information. Among the incomes, we have interest from loans, from members' loans. And this interest from members' loans, I've explained that is not taxable due to mutuality. Interest from treasury bills, this is a taxable interest income. Interest from government infrastructure bond. Interest from government infrastructure bond, which is having a maturity of more than 3 years, is exempt and therefore not taxable. Interest from ABA Bank. Interest from ABA Bank is non-qualifying interest, and therefore this is taxable interest income. Rental income is also taxable, but there are rental expenses which should be deducted from the rental income. Dividend from Mazao Sacco Limited. Dividend from Mazao Sacco Limited is a qualifying dividend income. Qualifying dividend incomes are subject to withholding tax at 5%, which is final withholding tax. So this is a qualifying dividend income. And being qualifying, it is not added for tax purposes. Dividend from SOPA Cooperatives Limited. This dividend is taxable. This one is taxable. Dividend is taxable. It's non-qualifying dividend income. Non-qualifying dividend incomes are subject to withholding tax at 15%, which is final. Then we have gross expenditure, gross income. Gross income. Then we have expenditure, which include office expenses, general expenses, credit loss, that is bad debts, repairs of rental property, and then we have net profit reported. Now, repairs of rental property here is an expenditure related to the rental income, therefore will be deducted from the rental income before determining the rental net rental income, which should be added. Credit on loss, that is bad debt. This credit on loss, bad debts, is also not allowable. It is part of the administrative expenses. General expenses is explained in the additional information number 2, and general and office expenses is explained in the additional information number 1. Let us then visit the additional information number 1, which says that office expenses include the following: salaries to employees, this administrative expense, which is not allowable. Salary to the caretaker of the rental property, this should be deducted from the rental property. purchase of office computers. This is capital expenditure, which is subject to investment allowances. But even the investment allowance for these particular computers are part of the administrative expenses because the computers are for office use. In number 2, we are told that general expenses include depreciation of 484,000. This is not allowable because depreciation is actually a capital expenditure and therefore not allowable. And non-performing loans to members, which is 620,000. Because the income generated from members is not taxable, the expenses related to such income from members are also not allowable. Therefore, the non-performing loans written off from members is also not allowable income. So this is not allowable and depreciation is not allowable. In number 3, we are told that the corporation tax during the year was at the rate of 25%. The question requires that we determine adjusted taxable profit for the year, starting with the reported profit. To answer this question, we need to prepare the statement of taxable profit for this particular company. To answer this question, we prepare the statement of taxable income that is a surplus or a deficit. To answer this question, we have to prepare statement of taxable income for the Sacco as follows. Sani Sacco Limited, statement of taxable profit for 2020, for the year 2020. Right, so we have been advised to start with the reported profit. So we start as follows. Reported net profit. And the reported net profit in this case is equal to 19,140. And to that we add back disallowable expenses. Disallowable expenses, which have been added. The expenses which have been added but are not allowable, we add them back. They include the following. We have office expenses that has been added but not allowable. The amount is 5,600. General expenses have been added but not allowable. The amount is 1,400. Credit loss has been added but not allowable. The amount is 60. Lastly, repairs to rental property has also been added, not allowable. The amount is 1,300. Now we determine the total of these 4 items. The total figure equal to 8360. These are the expenses which have been added but were not supposed to be added. After determining and adding back these liable expenses, we are supposed to also add taxable incomes which have not been included. But in the case of this example, we don't have any taxable incomes which have not been included. That therefore means that we ignore them and we go to the next item, which is non-taxable incomes which have been added. We deduct less non-taxable incomes added. And such items include the following: interest on members' loan, interest on members' loan, and the interest on members' loan. In this case, the interest on members' loan is equal to 16,200. That is followed by interest from government infrastructure bonds, the infrastructure bond has a maturity of 5 years, which is more than 3 years. In a case whereby the infrastructure bond has a maturity of more than 3 years, then the interest from such bond is exempted from taxation. Next is rental income. Rental income. Rental income will be reported as a separate source of income. That is why we deduct it at this particular point. Following that is a dividend from Mazao Sacco. This is a qualifying dividend income and therefore subject to 5% withholding tax, which is final. Next is a dividend from SOPA Cooperative. Now, dividend from SOPA Cooperative will also be reported as a separate source of income because this is part of investment income of this particular Sacco. It's non-qualifying dividend income, but then will be reported as a separate source of income. That is why it is being separated. That is 600 shillings. The total is 22,800. The sum of the figures is 4,700. And this is known as taxable business income. After determining the taxable business income, we need to add other taxable incomes. And these are entirely investment incomes. The first one is rental income. Rental income, which is equal to 3,200. But then we deduct the rental expenses. The rental expenses associated with this rental income include repairs to rental property, repairs to rental property equal to 1,300. Then salaries to caretaker, caretaker of the rental property equals to 200. If we deduct the two expenses from the rental income, then we get a total of 1,700 as the net rental income. We also need to add dividends from CPA Cooperative Limited. Dividend from CPA Cooperative Limited. The amount is 600, amounting to 600. The total is therefore $7,000. The total is therefore 7,000. And 7,000 is known as total total taxable income. Or we can call it adjusted taxable income. It is on this adjusted taxable income that we determine the tax for this particular business for this period. Now, the second question is asking us to determine the tax liability. Therefore, the tax liability for this particular Sacco for the year 2020 equals to 25%, because the rate of tax is given as 25%, times 7,000. That is equal to 1,750. And that is the tax liability, the tax chargeable or the tax payable.